just met Jon literally 39 minutes ago, and he seems like a great guy. Corey, I'll actually let you do the introduction since you're good friends with Jon.
Sounds good. Thanks, Joseph. Um, Jon, welcome. He's been investing in real estate for a number of years. I don't even know off the top of my head. He has a construction background. He started out multifamily, small multifamily, and now he's killing it in the multi-tenant industrial flex space, which a lot of people I talk to don't understand exactly what industrial flex is, and I'm sure he will go into great depth. But I believe he mentioned they just crested 50 million in assets under management. So really looking forward to hearing more about what Jon's doing and some of the deals he has coming up. Jon, take it away.
Th- Thank you, Corey, and thank you, Joseph and Connor. Thank you for bringing me on. I know it's gonna be difficult to follow up that Sun Casa awesome presentation.
Thank you.
Um, Great job, guys.
Thank you.
And thank you everyone for joining tonight. So I'm a industrial real estate investor operator, where we have a national portfolio, which Corey just said, we're over 50 million today. And I think it's in the 60 to 70 million dollar range. I was running valuations on the portfolio in Savannah. We have 3 properties close to the port in Savannah, Georgia, and that's that property's appreciating like crazy. But so what we do is we invest in industrial flex real estate, multi-tenant, which a lot of people, you're probably scratching your head thinking, what is industrial flex? Why would I invest in it? And essentially what I tell people is think about the contractors that are gonna do all the work on your house, that are gonna be the HVAC, the plumbing, electrical, gas, the road contractors, those guys need a place to store their materials, their equipment. Those are the guys that we rent to. We rent small warehouse space. These companies will lease the value of this asset class, is that these tenants, there are a number of reasons that this is really the multi-family of industrial flex, of commercial, of really any of all the other asset classes. This is one that is very resilient, and the reason being is those are the businesses that are busy, whether it's a upswing in the market, a downturn in the market, whether the market's flat, they're always busy because you always need an electrician working on projects around your house. You always need plumbers. Everyone has those plumbers. You always need landscapers, and they're busy. And as long as they can stay in this spot, as long as they can stay in their business, then they're gonna keep their doors open, and we aim for win 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 win. I think that's what I've told you, Corey. We want everybody to win in our project, from the seller, the tenants, the buyers, the investors, the brokers. Everyone is gonna win in our situation. So I don't have a presentation to show you guys, but I do have a couple case studies that I'm going to share.
Yeah, and Jon, just
That
before you start, Jon, I just want to let
Yeah.
the group know if you have underwriting, something rough that you're working on, a one pager or a full presentation like the Sun Casa crew had, feel free to come with your presentation and just present whatever you want. Get feedback from the group. Kind of you can poke holes in it. We have some constructive criticism and stuff like that, and also just learn the different aspects of what it takes to be a real estate investor, from acquisitions to capital raising to asset management as well. So I'll let you go ahead, John. Sorry about that.
Awesome. Thanks, Joe. Yeah. So this is our asset, one of our assets down in Savannah Garden City, Georgia. We bought this a couple of years ago, and this is how it's doing today. We acquired it for 3.65 million. We used 1.4 million, just over 1.4 million equity in the deal, which is about a 65% loan to value. And if I say a term or say something that is new to someone and they want me to kind of explain it, put it in the chat, raise their hand, unmute, and ask the question, and I'll just briefly go over it. But 3.65, it was the buy price. We had 1.42 as the equity that we raised from investors. The day one gross income was $33,000 a month, which is just over $400,000 annually. The expense ratio was 18%. That is one of the beautiful things about this asset class. You don't have crazy high expense ratios. And actually there's a way where you can get rid of all your expenses, which the deal that Corey and I closed about a year ago, which I'll talk after this one quickly. That deal has no expenses. All the expenses are put off on the tenant, so that is a hedge to your risk. Joe, what's going on?
Yeah, so let's kind of break that down. So 18%, super low, and to kind of put that into context for other people, when you look at, let's say, a multifamily apartment building, especially a older one, you're looking at around 45%, 50% optimistically, right? A new build might be 35%. But walk us through exactly what, for people that may not know, what exactly the OPEX ratio is. So you have 6,200 divided by 7,400. So what is that? What are those numbers exactly?
6,200 was the monthly, 74.4 is the annual expense ratio, which over 402,000 is 18%. Which that is the reason we're achieving expense ratios of 18% is because you don't have, your toilets, your, all the fixtures that a multifamily will have, the flooring, all that stuff. This is a warehouse, and if a tenant wants to fit it out, it's going to be their responsibility. It's not going to be up to us. So,
Hey, John,
yep.
sorry to interrupt. I'm not sure I'm sure you will get to it, but could you touch on the different types of leases for industrial compared to multifamily? So triple net, gross, double net.
Yeah.
To explain that.
Yeah. I'll get to that. Thanks, Corey.
All right. Thanks.
Basically your expense ratio, your expenses are a lot less. You're not dealing with the toilets, you're not dealing with fixtures, you're not dealing with hardwood floors, you're not dealing with countertops, cabinets, all that. This is, it's really a shell of a warehouse, and that is what really makes this asset class so superior and why we really like it. The other reason that we like it is lease structures. Lease structures will typically they come in there are two real main types of lease structures, which are modified gross and triple net. So your triple net, your double net, and whatnot there. But modified gross is where the tenant pays one rental fee every month, and then in their rent, taxes, insurance, and water and sewer, all of that is really included in a modified gross lease. When you have a triple net lease, all that's included in your lease is the space that you rent, and then you'll be billed either monthly, quarterly, annually, biannually. You'll be billed on a schedule for like a cam fee or the taxes, the insurance. You'll be billed for the other triple net expenses, water and sewer. So for this deal, 20 Brace Industrial in Garden City, part of the value add is transferring the deal from a modified gross lease structure over to a triple net lease structure, and we capture that $74,000 we capture in the new rent. Now, this deal in particular, we when we bought it, the average rent was $680 a month. Today, the average rent is, or we're signing leases at $1,100 a month today. And that's triple net. So 680 was modified gross. 1100 is triple net, where we don't include, and we have about 50% of the building. We're 100% occupied at every asset that we own and operate in Garden City, Savannah, Georgia. But then and we're all triple net, and we're at premium rents because we operate very great, efficient assets that people enjoy being the tenants, and it's a great product. So continuing on down the line, we have debt at 505, which we got debt in 2022 just before it, and we fixed it. So we bought correctly and we got good debt. The gross income, as you can see monthly, it's gone up about $7,000 or over $7,000 a month, almost $8,000 a month, and we've added over $80,000 of new rent to this building, which goes straight to the bottom line, to the value of the building. The money that we've distributed over the 3 years that we've owned it has equaled about over 30% in cash on cash of what the investors have in this deal and what we've distributed. So this deal has distributed great returns. Any questions before I bounce to the next deal? I know I'm moving kind of quick.
Quick question, John, how often do you make distributions to your investors?
This deal distributes quarterly.
And John, what obviously you've done this quite a bit. What makes a good market to buy flex industrial properties? So obviously you've got Garden City, Georgia here. What other markets are you looking at, and what kind of indicators do you look at to identify those markets? And
so we've bought in we've bought in High Point, North Carolina. We've bought in Wilmington, North Carolina. So we're in a couple markets in North Carolina. We're in Georgia, Florida, Louisiana, Texas, and North Dakota. And what we look for is we really look for the demand driver, which will be what is going to bring companies to the market and what's going to hold the company in that market. And we have to have a good answer to that. This market in particular, there's a really strong port that is expanding very rapidly. we're looking at all the other port markets as well. We're closing in Norfolk, Virginia, within the next 2 weeks, or by the end of the month. And then we're closing in Williston, North Dakota, which has a significant oil field in that market. That is Garden City.
Yeah, so if you guys have any questions for John, or you want to circle back to the Suncastle group, I think Eric, if you're still on the call, and think you had your hand up as well, if you want to ask your question, or we could even just, talk a little bit as well.
I had a question for John. John, sorry, when you're sourcing these, are these ready built, or are you guys building these out?
We are developing some, but we make sure that there's income on the property in place before we buy it. So we're stepping in the income day one.
Right.
We just heard from Jon Sidoti about industrial flex. If you're interested in hearing more, let us know, drop a comment, like, subscribe, and keep an eye out for more videos. They're coming soon. Thanks for watching.